Welcome, and I'm very happy to introduce Mutares today to you. Mutares is a global private equity special investor. My name is Johannes Laumann. I'm the CIO of the group. Who are we? What is our mission? What is driving us? Us, 4 board members, Robin Leig is the CEO and founder. Together with Mark and Leonard, I do lead this operation. Our mission is clearly and very simple: to transform distressed companies. To basically, in other words saying, take garbage and find the diamond. How do we do that? We do that through a lot of entrepreneurship. When we buy companies and we buy carve-out situation, distressed assets, nothing works in this company. And you can only win over and restructure this company by being an entrepreneur, by taking risks, by taking decisions, by knowing what you do, by making your hands dirty of doing that. This is us. And at the end, we want to be, and we are on the path there, to be a global leader in special carve-out distressed situations. In the end, to create shareholder value. Shareholder value, we are stock listed in Frankfurt, and management owns close to 40% of the shares. All the rest is free float. So we have a common interest in order to create shareholder value and increase shareholder value. Where we are basically European founded. We grew a lot in Europe over the past years, and we have just 4 overseas locations, which are more or less brand new. We have just inaugurated our Chicago office. Shanghai is there a little bit longer already. We have inaugurated a couple of months back Mumbai, and we have just founded the Tokyo office recently, which we now will be gradually build up. So we have a global footprint, which is important on transactions because we always attack with a local team in order to, get a much better understanding, be closer to the deal, and understand what needs to happen in order to strike a deal. We are focusing on turnaround distressed carve-outs, which means the unbeloved child of a large group, the unbeloved child of some governmental organization who wants to privatize, something which is not in the focus of the current owner. We are operating in 4 different segments. I'll come to that in a second. Those segments are balanced, meaning we have segments which are in the early cycle of the economy, segments in the late cycle, and segments which are basically non-cyclical. And this is the fact and driven by, obviously, we always have then good and bad companies in the portfolio, but it also gives us the chance to buy and to sell every day a company. Because every day we have a company in the right cycle at the right point. And then at the end of the day, we want to align shareholder focus. We'll not do strange things going forward because we ourselves own 40% of the shares. That since years, and we are committed to the firm, which you also could see lately by transferring already our shares to the next generation. When we come, what is our operating model? First, we buy. We calculate risk and we invest capital in order to buy a distressed asset, in order to buy the unbeloved child of a large group. And then we have a realignment and optimization phase, which is basically the restructuring, the operational value add. I have roughly 160 operation people on the payroll who are in our portfolio companies, day in, day out, fighting to make the thing better on a day-to-day basis. So this is our in-house consultant, our in-house turnaround special forces who are driving then the value creation after the acquisition. And then last but not least, we want to exit the company. We have just this year exited Steyr Motors. We have exited Terranor, both through an IPO procedure. And we have exited in France a kind of medical business, Locafarm, in a trade sale. A typical holding period for us, 3 to 5 years. As we are not a fund, we are not driven by any time constraints. So we decide when it's the right moment, believe it's the right moment to divest one of our portfolios. One of our portfolio means you see here our 4 segments, 33 companies in total. We have 4 automotive companies, mainly 2 big groups on the automotive supply side, one in the metal part and one in the plastic part. Engineering technology, late cycle here, as you see, 10 companies. They are mainly focusing on the area of energy. So we have with Efacec a transformer business in there. We have Quascor, which is a gas engine business, former Siemens Energy, and many, many more. Then we have infrastructure special industries. This is everything around infrastructure, logistic companies, road maintenance companies, but also defense is in there. Companies where we provide products and material, the typical customers in the defense industry. And then we have goods and services, which are predominantly industrial services, starting from electricians, industrial services, to welding specialists, etc., etc. So we have groups there focusing on specific industries, on industrial services, providing the offering. With Mutares, you invest in one firm, and at the same time, you are invested in 33. In a diversified, in a balanced segmentation. We focus on growth. We want to grow to 10 billion. We are currently at 7 billion. We want to grow to 200 million profit, which is roughly then 9 euros per share. This year, we are expecting 130 to 160, and we want to grow to a 1 billion market cap. We are an attractive dividend payer. We have a base dividend of 2 euros, which we performed over the past 2 years. And then if there are significant upsides in the year of this, we will pay an additional performance dividend. Always said and to be repeated, attractive also through to the family relationship. 40% are in our hand. So we have exactly the same interest with you on the equity investors. And then we are also have outstanding bonds, which is an attractive investments in the double-digit percentage return here. Also on the bond side, a maturity 27 and 29, stock listed in Oslo and Frankfurt. Thank you very much for listening. Join us on the web, join us on LinkedIn, and join us obviously here on CD11A. Thank you so much.
Disclaimer. As described in the legal section on our website, c11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. C11A.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.